Our business health. So we're feeling pretty healthy from a business point of view. We've got a couple of KPIs around our farm working expenses. We do target $4 and $4 per kilo milk solid. That includes all of our wages in there because we don't have any wage that goes out for management afterwards. Our operating profit per hectare, we aim to be in the top 20%, and our return on asset, which we're aiming for around sort of 6%. So a couple of updates, I guess, at the moment, which is relevant to you all here, is where we're tracking. This never happens, this variance of about 1,000 between what we expected to spend. This is up to the end of January and what we have spent. I guess the key thing to note is that we have stuck to the budget. Like, we haven't gone out and spent a whole lot of money just because the payout's gone up. We stuck with the plan, and the plan was to achieve 175,000 kilos of milk solids and to do it at that cost. So that's always been the driver. What's quite different is the income side of it. So We've got about, so far, there's about an extra $60,000 worth of income that's come in, and because our expenses have maintained relatively similar, we're looking at an extra, about 40 grand at the moment, extra surplus. We expect that will, of course, grow. This budget is still done on the 640. So remember, we started at 615. We updated this budget to 640, and we've kept that in the budget. So what we're looking at is what's the extra profit that's been generated by the increase in advance rates. That will fly out again to probably around 100,000, if not more, by the end of the season. What we are still got to come out is we've got about 25k worth of autumn fert. We've got 20 odd k worth of regrassing that's pretty much been done now. We had 11k allocated for zinc boluses, and we don't think we're going to need them. Spore counts have remained relatively low. There's about 20 odd k in raceworks, which has been spent, and about 15k for a planting plan. So we're assuming that there could be a few savings still to be made on the expense side of it, but that's still all in budget. The key thing is, what are we doing with this extra money that we've got this year? Thankfully, we've been able to upgrade the silage wagon. We've had a bit of a nightmare with it, haven't we, Tom? It's a really big part of our system. We're on to about our third replacement one at the moment. Our silage wagon was 6 years old as a second-hand wagon and just couldn't keep up with things. We're replacing that, so that's capital expenditure. We're investing 12k in getting gene-marked DNA testing the herd, so getting parentage on the herd, so we haven't had that done before. We're investing in getting the whole herd done. This gives us the ability to get correct parentage, gives us increased sale value for our high BW herd and excess stock, and it also allows us to start making more effective selection choice for our herd moving forward. Another $3,000 we spend on water lines and water reticulation as probably one of the other primary expense areas. What we're trying to do with our performance is that we want to be up in this top quartile. This is our dairy-based information. Who here uses dairy-based for analysing financial performance? Great. So you'll be pretty familiar with this. Our operating profit last year was just above average. Milk solids production, we can see, was above average, but our revenue was just above average, and operating expenses are average. Our biggest challenge on this farm is managing costs, really. And every time we invest money to achieve one of the other wagon wheel KPIs, we really have to focus on how do we extract profit from that investment. So if we invest in animal welfare, we want to make sure that that cow is now a productive cow on our farm. If we invest in some other quality aspect, we want to make sure we're getting value from it, whether it's a higher quality calf, higher value from any beef animals, or higher value for our milk product. One of the limitations we have is that we do invest in environmental outcomes, and this doesn't always reflect what that looks like. And what we now have... So what was really interesting when we compare against the top 20%, particularly last year, is that we achieved about 1130 in the drought, and the benchmark group that were the top 20% performers were doing about 1600. Last year, with a high payout and a drought year, if you had the facility and the capability to buy an extra feed, there was still money to be made. We were limited to buying grass silage and palm kennel. Palm kennel was limited by the FEI, grass silage was limited by availability. We didn't really have a lot of other choices, so we weren't chasing production. So we know that we do forego a bit of profitability when we look at these farms all producing a whole lot more production with us that are achieving these higher profit levels. So these are all top 20% farms. They're also represented by a higher stocking rate. We've made a conscious decision to reduce our stocking rate in order to address some of our environmental outcomes as well. So now what's quite exciting is where DNZ's going with the Step Change project. So for the first time, we can actually compare our profit with the environmental KPIs. So has anyone seen these graphs? Did anyone go to Gary and Marie Jose's field day yesterday? A few nods, yep. So now we can actually look at how does our operating profit compare to things like our purchased nitrogen surplus or our methane emissions. So our farm sits about here, and what the aim of the game really is to get into bracket A. So this is our purchased nitrogen surplus. We can see that we are, and these are pretty much the 50% quartile. We know that there's still room for us to move in reducing our purchased N surplus. And we'll talk a little bit about that in a minute. And we can also see that there's still room for us to move with our profitability to get up to this space. And these are the sorts of farmers we can start to learn from. What is it that these guys are doing? What can we learn from them? Profitable systems with low purchased N surplus. The other one that we can also look at is the operating profit compared to methane emissions. This is our farm here. We're doing pretty good with that. We know that our system with the lower stocking rate and the high per cow performance is helping us to achieve it. Once again, we just need to do it and make more profit while we're doing it. So we're not driven by reducing our methane emissions as much as we are on our nitrogen. And so our focus as we continue to move forward is looking at nitrogen in our system, how we use it better and how we use it more effectively.